I recently did a podcast talking about valuations, and I'd like to talk about that in a little more detail today.
Make Better Wealth Decisions, a podcast that explores how financial advisors' blind spots can harm your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto.
Market valuations have been a concern for a couple of years now. In fact, if we look back to the end of 2022, market valuations have been exceedingly high for the entirety of the time in between, more than 2 years. And we're looking at things like a cyclically adjusted price earnings ratio on the S&P 500 at around 37 or 38, and a Buffett ratio on the US stock market of over 200, both of which are perhaps 97th or 98th percentile, two sigmas, the sort of thing that only happens once every 20, 50 years or so. So markets are exceedingly expensive and as a result, exceedingly risky. How do you think about this as an investor? One of the things that we talked about in the podcast, and one of the things I want to share with you, is that valuations are lousy, absolutely lousy for timing markets. You have no way of knowing if the valuation is going to stay expensive or if it's going to tumble or perhaps even get more expensive. You just don't know. It's the sort of thing that no one can use in a meaningful way. There is no meaningful information with regard to market timing in valuations, so don't try. The thing that you do know, however, about market valuations that are high is that they are the sorts of things that when they are high, the next little while, I'll define that as the next 5 to 10 years, are likely to have modest and oftentimes even negative returns. That means you could actually, it's now February of 2025, you could easily go to February of 2030 or even February of 2035 and make no money in the stock market because valuations are as high as they are, and it can take half a decade to a decade for things to normalize before they start going up again. That was what we talked about in the podcast in general, but I want to talk about something even more specific that's part of the news every day, and that is tariffs and the threat coming from Donald Trump. What people don't seem to recognize is that this tariff threat is real. It's absolutely coming. It's the sort of thing that will be coming for all nations around the world, some more than others, some sooner than others, some for certain sectors of the economy as opposed to others. But I don't think there is any major nation in the world that will be able to avoid what seems to be a forthcoming trade war, a tariff war. No one wins a tariff war. This is bad for the economy pretty much all the time, and it's almost certain to be bad for capital markets as well. Now, remember that capital markets and the stock market are different, and the economy are different things. So, capital markets is the stock market, what goes up, what goes down, and how you make money. Rather, in contrast, the economy is: do we have a job? Are we able to pay for our groceries? Can we make our mortgage payments? What's happening with the employment rate? What's happening with the inflation rate? All of those things are part of the economy. So tariffs are almost certain to have a negative impact on the economy, and they may very well have a negative impact on capital markets as well. Here in Canada, a lot of people don't seem to realize that what we could be in for, at least in the short to medium term, I'll define that as the next 4 years while Donald Trump is president, could very well entail a significant reduction in our quality of life and our standard of living. These tariffs could easily throw 3, 4, 5% of the people that are currently working out of the workforce, and unemployment could actually reach something close to double digits. Inflation could be much more of a concern, and things that cost a fair bit now already could very easily cost a lot more going forward, and a whole series of negative repercussions could very well be felt. When you think about this, and as you try to make better wealth decisions, you should brace yourself for something that could very probably, not certainly, but very probably come our way starting when the tariffs start to hit in the coming month or two. This could very well be the last time that we in Canada can enjoy a comfortable lifestyle before things get much worse, and could possibly stay that way for many years to come.
John DeGuy is a portfolio manager with Design Securities in Toronto. The views expressed in this programme are not to be construed as specific advice. It is recommended that you consult a qualified advisor before taking action. His books, The Professional Financial Advisor 4, Stand Up to the Financial Services Industry and Bullshift are available through Amazon and in bookstores throughout Canada. You can reach John at 647 Stand Up. That's 647 782 6387 or at jdegui@designedsecurities.ca.